So congratulations for taking this bold step. You didn't take the wrong step. Actually, you are going to get value for your money. So this is the entries and exit pizza, all brought to you by A Plus Trading Hub. The aim of this course is just to train you and drill you on where is the best place to enter any trade and when to get out. It's straight to the point. So by the end of this training course, you are going to learn more about this. You are going to learn working strategies, perfectly working strategies that you will use to make money from the market. But before we dive right inside to the exact entries and exit strategies, I want us to briefly look at the basics of entries and exits. So first of all, what is trading entries? Now, trading entries refers to the price at which a trader buys or sells an asset. Entries are important components of any trading strategy because it helps to reduce investment risks and also removes emotion when making trading decisions. A good entry is the first step to achieving a successful trade. So that is why your trading entries is very important and vital. Okay, let's also look at trading exit. So basically, trading exit refers to the price at which a trader intends to close his or her open positions. Now, exit is not just about take profit. It also include stop loss and also trailing stops. You know how to manage your trade, because your trade can be in profit, but if you don't manage it properly, the market will still take off the profit from your hand. So exit also includes how you trail your stops, where you put your SL as the price is moving in your favor too. A successful trading strategy or system must have a clear exit rules. So if you don't have a clear exit rules, then you don't have a good trading strategy. Okay, before we move forward, I want us to look at your entry time frame and also your higher time frame. Now we have done a webinar on time frames. So if you are still finding it difficult for you to know what time frame to use in your trading, I will humbly suggest you go through that webinar again. You know, actually it was a free webinar then, and it's been taken down, so you won't be able to access it except you're a member of the Pro Traders course. So it's only members of the Pro Traders course will be able to access it. All right, so that aside, let's focus on entries and exit. Okay, so first of all, you need to define your entry and higher time frames too. Okay, like me, I know my higher time frames, I know my entry time frames. Okay, so you can choose between 30 minutes, 15 minutes, 1 hour, 4 hour, daily, 2 days, weekly charts, monthly charts. Whichever time frame you choose, this is what I want you to know. Your entry time frame should be at least 5 times or 6 times lower than your higher time frame. If the 1 hour chart is your entry time frame, then the 8 hour chart should be your higher time frame. All right, so also if the daily chart is your entry time frame, your higher time frame should be the weekly time frame. Let's just say you are a scalper. If the 15-minute time frame is your entry time frame, then your higher time frame should be 75 minutes. Okay, or maybe 2 hours time frame. All right, so that is how you don't need to use over 3 trading time frames, 4 trading time frames to trade. Personally, I use 3, and I know why I'm using 3. Okay, so you don't need to copy exactly what I'm doing. So you also need to define your entry triggers. So what are your entry triggers? For me, what I use is the engulfing candles, the railway candles, the pin bars. Okay, if I see these candlestick formations on my key turning zones, or where I want to pull my trigger I'm very 100, in fact I'm more than 100% comfortable taking that trade. Not like I don't consider other candlestick formation, but these are my real entry triggers. All right, you can combine this with maybe with RSI, with any other indicator you want to use to define your entry triggers. Okay, so but this, don't forget this course, I'm actually showing you exactly what I have been doing over the past 2 years that is working perfectly well and is still working with you. Okay, but you are very free to take out some things and add other things. Right, so that is cool. Then don't forget, always enter your trades at price confluence zones. So if a particular zone is not a confluence zone, it won't hold much water, so you can let it go and look for a better entry point. Then you need to define your exit trigger. So what are your exit triggers? Very first thing is the news, the fundamental events, the economic calendar, and any other major events that I know is going to affect a particular currency pair I'm trading. So a particular news may make me exit a trade. Then also a change in the market structure can also make me exit a trade. So you need to define your entry triggers. I hope you are with your notepad there and also with your pen and you are writing down these things. These are the steps you need to follow if you want to have a good entry and exit strategy. So as you are going through this, you are jotting down this and you are also fine-tuning your own strategies. But if exactly what I'm showing you here will work for you, fine. But if there are some things that you are not comfortable with, you take it out. All right, and focus on the ones that you are cool with. Trading is a matter of personality. I've always been saying this is a matter of personality. What works for me may not totally work for you, except you adjust one or two things. You can also include sentiment to your exit strategies. There are some traders that exit a trade based on sentiment, like based on what other traders are saying. All right, so but I don't exit my trade based on what other traders are saying. If it's not the news or a change in market structure, I'm holding my position and I'm trailing it up there. All right, so this is the key component for every entry and exit strategy. All right, whether you are using an automated or a manual trading system, you will need to take into account these three essential components. The very first thing is liquidity. This enables you to swiftly enter and exit the trade at an attractive and stable price. So whenever you are taking a position, look at the chart again. All right, look at the currency pair again, gauge it. Is this pair liquid? That's why I love trading the pound USD. That's why I love trading the euro AUD. They are highly liquid. All right, so you need to make sure any assets you are trading is highly liquid. If it's not liquid, forget about it. All right, the number 2 essential component is volatility. Now this tells you your potential profit range. The greater the volatility, the greater the profit and or loss you may make. All right, so if a pair is volatile, then you can make more money from it. That is why some traders actually trade the indexes like the V75, VX75 and the rest of them, and steep, then boom and crash, because it's highly volatile. All right, but I don't go to that side. I carry my loads and I keep it on the currency market. So if I want to trade highly volatile pairs, I look at the exotic pairs there, like USD ZAR, USD MXN. Those are the kind of volatile pairs I trade. All right, even pound yen is volatile, pound NZD is volatile. All right, so make sure you are trading the volatility. It's very you gauge the volatility properly, because if the market is not volatile, then it will be stagnant. Price may not be moving very fast for you to make profits, except you are ready to wait for a whole lot of time before price hits your take profits. All right, so you need to gauge volatility too. Now the third component here is the volume. This measurement will tell you how many times the assets have been traded within a set period of time. High volumes tells you there is a significant interest in the asset. So you need to be trading a particular asset or currency pair that you have a huge volume in it. When I'm talking about volume, I'm talking about money here. You know, money, huge volume, like majority of traders, big boys are keeping an eye on it. So they are the ones that can actually, you know, push the price, you know, to your favor. Alright, so you need to look at liquidity, volatility, and also the volume. Alright, so whenever you are trading, before you jump on that trade, gauge these three things. Your entries and exit strategy needs this. You may have a perfect entry and exit strategy, but if you are not using it on the right assets or the right currency pair or the right stock, it will not be performing well as you expect. Okay, this is the first model of the entries and exit pizza. I just wanted to bring in this basic stuff so you understand this first before we move into the entries strategy and the exit strategy proper. All right, so on the next model we are going to discuss in details the entry strategies which I have been using to rake in money from forex trading. All right, so I'll see you on the next model.